When the market swings wildly, traditional moving averages are always a step behind. But when the trend is clear, you want your indicator to catch opportunities more sensitively. How do we solve this contradiction? The strategy we are sharing today uses an intelligent indicator that automatically adjusts its sensitivity based on market conditions. It is called VIDYA, and it comes with a multi-tier profit-taking mechanism. This lets us capture trends while locking in profits precisely. This is the VIDYA Pro Trend multi-tier profit strategy. Hello everyone. Welcome to the FMZ Strategy Selection channel. This channel focuses on screening the most classic and cutting-edge proven strategies in the cryptocurrency field. The main problem with traditional trend strategies is rigidity. Fixed period moving averages cannot adapt to changes in market rhythm. Single profit-taking methods either exit too early and miss profits or hold greedily and suffer deep drawdowns. The market is flexible and ever-changing, but most strategies are rigid and stubborn. The core advantage of the VIDYA Pro Trend multi-tier profit strategy is flexibility. It uses the variable index, dynamic average, VIDYA, as its core indicator. It pairs this with a 6-tier progressive profit-taking system. At the same time, it uses differentiated handling for long and short positions. This design philosophy of using flexibility to overcome rigidity allows the strategy to navigate with ease in the highly volatile, fast-paced cryptocurrency market. The strategy core is a 3-layer validation entry mechanism paired with a dual-track profit-taking system. The first layer uses fast and slow dual VIDYAs to confirm the trend. VIDYA is an adaptive moving average based on the Chande Momentum Oscillator. Its unique feature is that it automatically adjusts its response speed based on market trend strength. When the trend is clear, it follows price quickly. During oscillation, it stays smooth to filter out noise. The fast VIDYA captures short-term momentum changes. The slow VIDYA locks in the medium-term trend direction. The second layer judges trend strength by calculating VIDYA slopes. It requires both fast and slow VIDYA slopes to reach the set threshold and be in the same direction. This ensures entry only when the trend is strong enough. The third layer introduces Bollinger Bands as a volatility filter. It requires price to break through the upper or lower Bollinger Band to trigger a signal. This ensures entry timing is at the critical juncture of volatility expansion. There are 2 exit methods. One is signal reversal exit, adopting a proactive risk control mindset. The other is multi-tier profit-taking exit, running both a TR dynamic profit-taking and fixed percentage profit-taking mechanisms simultaneously. A TR dynamic profit-taking adapts to market volatility. Percentage profit-taking locks in certain gains. 6-tier partial position closing both ensures profit safety and preserves space for trend continuation. The strategy also uses differentiated design for long and short positions, matching cryptocurrency market characteristics. The entire logic organically integrates the rigor of trend recognition, the flexibility of profit-taking execution, and the targeting of market characteristics. The strategy parameter settings reflect a refined risk control approach. The trading direction selection offers 3 options: long only, short only, or both. This allows flexible adjustment of strategy direction in one-sided markets. The VIDYA period parameters are the core configuration of the strategy. The fast period defaults to 10 to capture short-term fluctuations. The slow period defaults to 30 to confirm medium-term trends. This 3 times period difference effectively distinguishes market rhythms at different time scales. The slope threshold defaults to 0.05, a key standard for judging trend strength. The larger this value, the more conservative the strategy, trading only in strong trends. The smaller it is, the more aggressive, capturing more weaker trends. The Bollinger Bands period defaults to 20, and the standard deviation multiplier defaults to 1.0. The profit-taking parameter group is another core design of the strategy. First, determine whether to enable multi-tier profit-taking and the direction selection for profit-taking. This can be set for long, short, or both directions. The ATR calculation period defaults to 14. A TR profit-taking multipliers are set at 3 levels. The first level at 2.618x captures small fluctuations. The second level at 5.0x locks in medium-sized moves. The third level at 10.0x aims for large-scale trends. This progressive design covers price movements of different magnitudes. Fixed percentage profit-taking levels are set at 3 tiers. The first tier at 3% suits quick profits. The second tier at 8% locks in medium gains. The third tier at 17% captures big moves. For position allocation, the 3 tiers of fixed percentage profit taking allocate 12%, 8%, and 10% of positions respectively. The 3 tiers of a TR profit, taking each allocate 10% of positions. The 6 tiers total a maximum of 60% profit taking. The strategy uses differentiated design for long and short characteristics. The short profit taking position allocation multipliers increased to 1.5, making short profit taking more aggressive than long. This is based on the market characteristic that cryptocurrency declines are usually faster than rises. Downtrends often come quickly and leave quickly. After a crash, there is often a quick rebound, so profits must be taken more actively. In comparison, uptrends are usually more sustainable, allowing positions to be held for larger gains. The VIDYA indicator calculation is the technical core of the entire strategy. We need to break down its mechanism step by step. The function definition receives 2 parameters, data source and calculation period. First, calculate the basic smoothing factor alpha. The formula is 2 divided by period plus 1. This is the same as the traditional EMA smoothing factor calculation. The longer the period, the smaller alpha, and the smoother the indicator. Next is the key momentum calculation step. Use the change function to get the difference between the current price and the previous period price. Then separate this change value into positive and negative parts. If the price rises, record the positive momentum. If it falls, record the absolute value of the negative momentum. This separation is for calculating the directional strength of the market later. Sum these 2 groups of momentum data over the period to get the positive momentum sum and negative momentum sum. The Chande Momentum Oscillator calculation formula is use the difference of positive and negative momentum divided by the sum of positive and negative momentum, then multiply by 100 to convert to percentage form. This oscillator's range is from negative 100 to 100. Close to 100 indicates a strong uptrend. Close to negative 100 indicates a strong downtrend. Close to 0 indicates oscillating market with no direction. Divide the absolute value of the Chande oscillator by 100 to get coefficient K. Its range is from 0 to 1. This K value is the core of VIDYA's adaptive characteristic. When the market trend is clear, K is close to 1. At this time, alpha multiplied by K gives a larger adjusted smoothing factor, and VIDYA will quickly respond to price changes. When the market oscillates, K is close to 0 and the adjusted smoothing factor is very small. VIDYA will stay smooth to filter noise. The final VIDYA calculation uses a recursive formula. If it is the first data point, use the price directly as the initial value. Otherwise, use the adjusted smoothing factor multiplied by the current price plus the remaining weight multiplied by the previous VIDYA value. The strategy then calls this function to generate fast and slow VIDYAs separately. The 2 use different periods, but the same adaptive logic. The Bollinger Bands calculation directly calls the built-in function input close price, period, and standard deviation multiplier. It returns upper band, middle band, and lower band values. The slope calculation function receives 3 parameters: current value, historical value, and time span. Get the rate of change per unit time by dividing price difference by time. Positive slope indicates uptrend. Negative slope indicates downtrend. The absolute value of slope directly reflects trend strength. The strategy calculates the slopes of fast and slow VIDYAs separately. Fast VIDYA slope keenly senses short-term momentum changes. Slow VIDYA slope steadily reflects medium-term trend strength. These 3 groups of indicators work together. VIDYA provides adaptive trend direction. Bollinger Bands confirm volatility breakouts. Slope quantifies trend strength. Together, they form the technical analysis foundation of the strategy. The signal generation logic reflects the strategy's ultimate pursuit of certainty. Long entry requires 5 conditions to be met simultaneously. First, price must be above the slow VIDYA. This ensures the medium-term trend is up. Second, the fast VIDYA slope must be greater than the slow VIDYA slope. This condition actually verifies that short-term momentum is stronger than long-term trend. Change speed. Third, the fast VIDYA slope must exceed the set threshold, proving short-term trend is strong enough. Fourth, the slow VIDYA slope must be greater than half the threshold, ensuring the long-term trend is also rising with some strength. Fifth, price must break through the Bollinger Band upper rail. This is a confirmation signal of volatility expansion, indicating the market is breaking out of normal volatility range into trend acceleration phase. These 5 conditions progress layer by layer from trend direction to trend strength to volatility. confirmation. They form a complete signal verification system. Short signals are a mirror image of long signals. They require price below slow VIDYA, fast VIDYA slope less than slow slope, both VIDYA slopes negative and meeting respective threshold requirements, and price breaking below Bollinger Band lower rail. Exit condition design reflects proactive risk control philosophy. Long exit has two trigger paths. One is when both fast and slow VIDYA slopes turn negative and meet threshold requirements. This means both short-term and medium-term trends have reversed, requiring exit. Two is when a complete short entry signal appears, indicating the market has switched from uptrend to downtrend. This also requires immediate position closing. This design does not wait for complete trend reversal. Instead, it proactively withdraws in the early stage of trend weakening or direction change. It reflects a prudent approach of preferring to earn less to protect profits. Short exit logic is completely symmetrical. This dual trigger mechanism ensures the strategy can respond to market changes in a timely manner. The strategy's entry logic reflects a rigorous position management mindset. Long entry requires three conditions to be met simultaneously. Signal condition is true, currently no position, and trading direction allows long. This triple check mechanism ensures the strategy will not repeatedly open positions when already holding positions, avoiding position loss of control. Short entry logic is completely symmetrical. It also requires signal, true, no position, and direction allowed. Exit logic is also designed rigorously. Long exit requires exit condition met, and actually holding long position. Short exit logic is mirror symmetrical. The multi-tier profit-taking mechanism is the core highlight of the strategy. It shows refined design for profit management. The system first checks whether multi-tier profit-taking is enabled and the profit-taking direction setting. This ensures profit-taking logic only executes when holding long positions and allowing long profit-taking. Profit-taking price calculation runs two systems simultaneously. A TR dynamic profit-taking is based on entry average price plus a TR value multiplied by preset multiples. The three-tier progressive design allows profit-taking targets to automatically adapt to market volatility. In high volatility periods, target prices automatically pull farther to give trends more space. In low volatility periods, target prices tighten to quickly lock profits. Fixed percentage profit-taking provides deterministic targets based on entry average price multiplied by percentage increase. The three tiers correspond to small, medium, and large profit levels, respectively. These two systems work in parallel. A TR profit-taking captures market rhythm changes. Percentage profit-taking provides stable expectations. Together, they form a dynamic and static profit-taking system. Each profit-taking tier is set as a limit order through the exit function. It specifies which entry order to close from, closing ratio, and target price. 6 profit-taking orders are placed simultaneously. When price touches any target price, the corresponding proportion of positions automatically closes. The 6 tiers total most positions for profit-taking. The remaining part is controlled by exit signals. This both ensures profit locking and preserves profit space for trend continuation. Short profit-taking logic is basically symmetrical to long, but the key is the difference in position allocation. All short profit-taking ratios are adjusted through the amplification coefficient. This makes short profit-taking more aggressive and locks in profits faster. The deep logic of this design was explained in detail in the parameter definition section. Cryptocurrency market declines are often fast and prone to rebounds. Profits need to be realized more actively. The execution mechanism of the 6 profit-taking tiers is completely consistent with long positions. Limit orders are set through the exit function. When price falls to touch target levels, positions automatically close. The strategy's best performance scenario is strong trend markets, especially the one-sided rapid rallies or crashes common in cryptocurrency markets. In such markets, VIDYA's adaptive characteristic can quickly keep up with price rhythm. Bollinger Band breakouts effectively filter noise. Multi-tier profit-taking can both quickly lock partial profits through percentage tiers to ensure win rate and capture large volatility gains through a TR tiers. Another applicable scenario is high volatility environments. When market TR is high, a TR-based profit-taking points will expand accordingly. This gives trends sufficient running space to avoid premature exits. When using, pay attention to liquidity requirements. Multi-tier profit-taking needs to set multiple limit orders. In less liquid small coins or non-mainstream trading pairs, there may be slippage issues. It is recommended to use on mainstream trading pairs. For advanced applications, you can dynamically adjust slope thresholds based on market volatility. When a TR is at historical highs, increase thresholds to raise entry barriers and filter noise. When a TR is low, lower thresholds to increase trading opportunities. Another technique is optimizing profit-taking ratio allocation. In strongly trending markets, lower the first two-tier ratios to preserve more positions for big moves. In oscillating markets, increase the first two-tier ratios to quickly lock profits. You can also consider adding volume confirmation. When breaking Bollinger Bands with volume expansion, signal reliability significantly improves. Evaluating the strategy from strict quantitative standards. Completeness scores 4.2 out of 5. It contains complete entry, exit, and multi-tier profit-taking logic. VIDYA's adaptive mechanism is ingeniously designed. The dual-track profit-taking system is comprehensive. Risk management scores 4.3. Multi-tier profit-taking is essentially a dynamic stop-loss system. Partial profit locking gradually reduces risk exposure. Signal reversal exit proactively withdraws in the early stage of trend weakening. Long-short asymmetric design precisely adapts to crypto market characteristic of declines faster than rises. Adaptability scores 4.1. VIDYA's adaptive characteristic allows the strategy to automatically adjust response speed in different market environments. Combined with Bollinger Band filtering and slope threshold verification, it effectively adapts to both oscillating and trending states. Understandability scores 4.2. Strategy logic is clear and layered. VIDYA calculation is complex, but the principle is easy to understand. Multi-tier profit-taking mechanism is intuitive and clear. Innovation scores 4.1. Applying the innovative adaptive indicator VIDYA to trend following is innovative. The dual-track profit-taking mechanism combining a TR dynamic adjustment and fixed percentage is cleverly designed. Long-short asymmetric profit-taking reflects deep insight into market microstructure. Practicality scores 4.0. The strategy performs excellently in strong trend markets. Multi-tier profit-taking significantly improves risk-reward ratio and win rate. Risk control mechanisms are comprehensive. Through parameter optimization, it can adapt to most trading scenarios. Code is complete and ready to use. Overall, rating 4.1. This is a well-designed, comprehensive risk control trend following strategy. VIDYA's adaptive characteristic and multi-tier profit-taking mechanism are two core advantages. It performs excellently in strong trend environments, suitable for traders pursuing steady returns.